Hello, everybody. What's up? Dr. Vong, world famous bariatric surgeon, author of 13 books. I'm getting used to saying that. That sounds pretty cool. Hey, today is November 25th, Wednesday, November 25th, the night before Thanksgiving. That's important because, as you know, things change so quickly where we're at. Tonight, we are going to talk money, 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 money. I got America's #1 money mentor on, my really good friend, Chris Naugle on, and he's going to talk about. Now, he'll tell you we cannot predict when the market will crash, but all of us know it's going to crash. The U.S. Dow Jones market is going to crash. I'll use the term pullback. It will pull back. But what we're going to do is maybe give you some ideas on what you can do to protect yourself and maybe even make some money. So let me give you a quick update on the coronavirus while we're getting some people in here, and say hello to Matt Sims and Rosemarie is in San Diego, and Donna Martucci and David Alvarez and Mary Beth Carr. So Mary Beth, get off the couch, do the work. Cher Kiltoff, you're awesome. Helena Voss, what's up? Good morning, good afternoon, good evening. All right, so we're going to get right into this, seriously, because Chris says that he has an amazing presentation, and we're always going like he runs out of time. But I will tell you that if you still have friends who don't believe that the coronavirus is real, who believe that it's a hoax, I think you should get rid of them. You really need to question the sanity, the thought thinking process of your friends if you are close to them and they believe that it's still a hoax. I'm not political. I don't really care how you vote, how you feel. But like it or not, the transition to the Biden presidency has started. That's a done deal. That's not a Dr. Vong saying thing. It's a done deal. Like it or don't like it, that's okay. But we all know that there are cycles in the stock market. It's usually 8-year cycles. We are on year 12 of an amazing run up. The Dow Jones hit 30,000 this week. And so we know that we're overdue for a correction. So we need to take precautions, do things that get us ready for what's coming. Now, we can't tell you when that's going to come. We're not here to tell you to buy stocks or recommend stocks or whatever. We're just giving you general advice and general education knowledge, okay? That's it. That's all we're doing. Coronavirus, if it were me and my family, we are not getting together. I have a 14-year-old daughter who I love, love, love dearly. But she stays with her mom and her mom's new husband. And as such, that is technically a separate household. So I won't be spending Thanksgiving with my firstborn, and it breaks my heart. But that is the times we live in. We Zoom, we do FaceTime, and we talk every day. But that's just where we are. That is the recommendation. And so I recommend that you really, really, really don't have any gatherings for Thanksgiving. And I realize that some people say, hey, if you're going to do it outdoors, get tested, isolate, wear your mask. I just, honestly, like, can you really trust people to have isolated, to have quarantined for the last 10 to 14 days? Can you trust people to really keep their mask on? Can you really trust people to not hug? It's Thanksgiving. I mean, think about it. In colder weather climates, outdoors might not be an option. So really, in order to have a good Christmas, we really need to not have our normal Thanksgiving. Do a Zoom Thanksgiving and just really limit it. All right. All right. With that, I'd like to bring on my really good friend, Mr. Chris Naugle. He, former pro snowboarder. He went on and started buying real estate. He owned a line of skateboard shops. He's done a lot of cool stuff in his life. He went on to Wall Street, and now he's bringing all of his knowledge from Wall Street to Main Street. Give it up for my good friend, Mr. Chris Nogo!
Awesome to be back. Awesome to be back. Man. And you're right. Like COVID's crazy. And, I still do have some people saying, oh, it's not real. And I'm just like, look, man, I'm in New York. Like I'm in upstate New York. We're red. We're going red. Like I can't even I don't even know how to count how many people I know that have or have had COVID. I've lost 2 people already to it. It's real, man. Yeah. I've lost 2 friends. Yeah. Our good friend, Ted, at the very beginning, he passed away from it. He had some underlying health issues, but man, it was just sad. Like when that happened, I remember it was like right in the beginning, right in March, I heard about it. I'm like, Ted's gone. What? Ted's gone. Why? COVID? What? That's like when it all sunk in. And I'm like, wow, I just lost a friend to this. And then another one. And then it was just like, and then my veterinarian got it. And he said it was like and he's a guy that like works out all the time. He's great health. And he said it was like having an elephant on his chest. And he said he's still not recovered from it. He still can't work out like he used to. So, I mean, you can look at it any way you want, but we've definitely been playing it real safe.
Well, I gave my little disclosure, but you can go ahead and give your little disclosure. You've been on Wall Street. You're one of the top earners in your firm. You've got all of the credentials behind your name. But just to be really clear, we're not recommending a stock or anything, are we?
Not at all. So listen, tonight, all we're going to do is I'm going to show you something so simple. Something that we did for years and years and years as financial advisors, something that my traders today do. And I'm sure I have one of them on here today. This is literally not complicated. Actually, it's the problem with what I'm going to show you is it's boring, but it is the way to make money consistently and persistently in any market cycle. So everybody knows how to make money when the market goes up. You could throw a monkey in here and you could put a dartboard up. And like, if the market's going up, like it has from, let's say 2011 to 2020, literally the monkey could throw darts at a whole wall of stocks. And whatever it hits, the monkey makes money. They proved that that's the case. But can you make money when a market goes down? Did you make money in March? Did you make money in 2008 and 9 when the market was crashing? That's really what sets apart the knowledge that we have and the knowledge that the other person does not have, because that's really
let me play devil's advocate, Chris. Like, that sounds risky. What for people who say that sounds too risky? I'm 65. I don't have much to. What would you say to them?
Well, if that question is I don't have much, you're going to love what I'm going to show you tonight, because I'm going to show you trades of like $122. I don't know how much lower we can go than that, but is there risk in the stock market? Yes, there is. This is investing, folks. There is risk, but here's what we're going to show you tonight. I'm going to show you something that you do consistently and persistently every 90 days. It's like learning how to ride a bicycle. The first time you do it, it's a little tough, right? You need somebody to help you. You need some training wheels, but then eventually we're going to take the training wheels off, and then we're going to, watch you ride the bike a little bit. Then after that, like, you're off, man. Go ride wheelies, ride 360s, or do 360s, do whatever. This is, investing. There is an element of risk, but what I'm going to show you tonight has less risk than your 401k, has less risk than probably any investing you've ever done. Because
wait a minute, I thought the 401k was safe.
401k is safe. Woo! You can live through 2008, obviously. Yeah, I mean, listen, mutual funds that are in 401ks ride the overall market patterns. So it looks great right now. Everybody is got blinders on because all they see is the past. And all Wall Street talks about is the past. Oh, look at how good it's been. Just the other day, didn't we just hit a monumental mark in the market? We just
30,000, baby.
Yeah, we broke it. Woo! That must mean we're going to the moon, folks. We're going to Mars, not the moon.
Even today, it's Wednesday, the night before Thanksgiving. They had the jobless claims report. That's still a reflection of last week's data, right?
That's correct. It's old and it's not even correct. If you watch the jobless claims and actually think those numbers reflect what's going on outside, then you obviously haven't left your house, which isn't such a bad thing. But it means you have no idea what Main Street looks like, because it doesn't look like what they're telling you. There's underlying major problems, and we're going to go into that a little bit today. And I will not go over time, because I have spent, listen, I've been on your show a lot. I've spent so much time preparing for this to keep this almost too simple, to the point where I want to leave a lot of time for questions. So
I like that. I like that.
We're not making any suggestions or recommendations. I'm going to show you a particular position that I do, okay? Because I do truly believe the markets are going down, and I have for a while. But I'm going to show you how we do it, what we do, and it's not so much what we buy. It's not the position we buy. It doesn't matter if it's Apple, Boeing. It doesn't matter what company you're buying. It's the strategy and the consistency and persistency in which you do it. And what I'm going to show you, I promise you, is going to blow your mind. Because
let's get going, man. Like,
well, before we do that, I got something, because, you know, here we are, doom and gloom. You can't meet with your families for Thanksgiving. Like, nobody's happy. Can I just make your audience laugh?
Please.
Can I just do that?
Yeah.
All right. I got a video. That's gonna make everyone laugh. And this is my new thing, folks. I'm all about bringing laughter to people through education. So I'm going to share my screen real quick, and let's see. Oh boy, can I do this right? Oh, is that it? Holy cow. I think I'm going to get this right.
Uh-oh.
Did you see a black screen?
Yes.
You do?
Here we go.
Oh my gosh. All right. Hopefully we get the volume. If we get the volume, man, I'm on fire tonight. Good evening, folks. I'm Seymour Cash from MSTV Worldwide, and I'm joined here with my co-host,
Anastasia Beaverhausen.
and we have a breaking news story for you tonight. This story has me incredibly concerned. And there's an epidemic going on out there, folks, right now, and it's happening all around. And no one's even covering this. No one's paying attention to this epidemic. It's like hiding in the secret shadows. What's happening?
It's called Fat Wallet. The wallet gains weight uncontrollably until the seams literally rip. It's initially undetectable until the damage is already done, and then it's too late. The wallet must be replaced to hold all that cash.
That really is unbelievable. You know, in fact, the scientists are telling us that there is a strong correlation between MSTV and the fat wallet. And we have a new report that shows that over 30% of our viewers are experiencing a 30% weight gain in their wallet, regardless of their spending habits. And I think this is going to lead to major health problems.
Reports are showing hip problems, back problems, just pants problems. Pants are ripping, holes just out of the butts of their pants.
Son of a...
This just in, Seymour Cash has checked himself into financial rehab. Thank you for tuning in to MSTV Worldwide.
Oh my God, that's hilarious. Seymour Cash.
Oh my God, I hope you guys like that, because you know what? Listen, that feeling you got when I was like, son of a, that's just a good feeling of laughter. And there's something so powerful about laughing, and just, it's so stupid, but like, just you laughed. And like, that's my only message, is laughing is good. It is. It's financial rehab, but it's mental rehab. In the world we live in, that is what we need more of. And I'm going to show you some great shit tonight. Really.
Show us how to make money on this downturn. Now, to be clear, we don't know exactly when the downturn's coming, but it's got to come.
Yeah, I have no idea when it's going to come. Ray Dalio doesn't know when it's going to come. Warren Buffett doesn't know when it's going to come. No one can time the market. I want to be very clear. What I'm not going to show you tonight is when to do things. I'm not going to show you exactly how to. I'm going to show you how to do something, but I'm not going to show you when this is all going to happen. I'm going to show you how to do something consistently and persistently and get ridiculous returns and ridiculous results out of it without you having to be smart. You don't have to be smart at it. You just got to follow the rules, follow your plan. So
the education, take it away, brother.
Right. So first off, I'm just going to kind of go into this. I want everybody to understand the world we live in right now is a world of uncertainty. And that is the new certain. Uncertainty really is the new certain. We know this. And the thing is, we all have to decide. You're going to do one of two things. You are either going to conform, okay? You're going to conform to what everybody else is doing, which is basically lay down, bury your head in the sand, or you're going to create. You're going to create your own destiny. And what I like to call today, or this whole thing, is when you start to make decisions in your life, decisions that create what I call a financial butterfly effect, those ripple effects, folks, those ripple effects have profound effects in the future. One change today has an effect in your financial future later. And that's all we're going to do. Okay. So these are the different things that I like to always talk about, right? Conforming is fear. We all have a little bit of fear right now. There's no question about it. But fear also creates people to freeze dead in their tracks. You ever see a deer in headlights? It just stops. And what happens? It gets hit by the car. I can't let any of you get hit by the car. I just can't. So we can't freeze. You can't conform. You got to just learn 1, 2 new things and act on them. And you need to get control of your money. And I need all of you, before I do this, and I got one more video I'm going to play at the very end. I need you to all think, believe, and dream that you can do this, because I'm telling you, you can. You don't think you can because no one's ever taught you this. Because no one had the reason to teach you this. There was no money in this. Some people are making comments on what we're going to talk about. And I want you to visualize your life doing the things you want. But let's get into the, let me grab that. Let me get into this, okay? So we're going to seek knowledge. That's what you need. All you need to do what I do, what I've done for 16 years professionally. All you need is just a tiny little knowledge. You don't need to know what I know. You don't need me to manage your money. You don't need to pay somebody else to manage your money. You just need a tiny little bit of knowledge. Matter of fact, you really just need 2 different things, 2 little things. And just like when you learn to ride your bicycle, I keep going back to this. It wasn't easy, was it? You don't remember, but when you got on that little bike, it had training wheels, okay? I'm your training wheels. All I need to be there for is just a little bit until you learn how to push the pedals down, and then you feel the bike go forward. The handlebars go to the right, the bike goes to the right, the handlebars go to the left, the bike goes to the left. That's riding a bike. Every one of you learned how to ride a bike, but it wasn't easy in the beginning. It was completely foreign. Nothing felt right. Remember when you get in a brand new car, get in any new car at the dealership today. You get in that car, it feels right to sit down and grab the steering wheel because you've done that before. But you look around, there's buttons everywhere. You're like, I don't know what that button does, that button, what? I don't know. Just tell me how to start the car. Oh, I push a button to start the car now? Listen, that's the thing. Like, you're uncomfortable for about a day, for 2 days. And then after that, you're driving the darn car. So this is what we're going to talk about. We're going to talk about the reality. The reality is what Duck said. The markets are going to go down. I just don't know when. I can't predict when. We just broke a new record. All these signs, okay? I want you to remember these words, CPC, okay? Duck and I know who talks about this all the time. CPC, clues. So let's first talk about some clues. Clue number 1, okay? Clue number 1 is right now we've got some serious things going on in the markets. What is the first clue? COVID rates are spiking back up. Serious, okay? COVID's going back up. What happened last time when COVID happened? Didn't the market crash down in March right here? Didn't this go way down in March? Clue number 1, COVID numbers are going back up. What is that going to mean? Number 2, businesses. Look at Main Street. What's going on in Main Street? Are businesses opening and flourishing? Are new restaurants opening? Are restaurants packed? No, they're empty. They're empty here in New York. Okay, takeout only, and that's even a thing. So businesses are suffering, big time suffering, and they're going to continue to suffer into this. You have a new president, elect coming in, and I want to make sure I say that properly. I hate politics. I don't talk politics. But you got a new president elect who is supposedly going to be coming in, right? That's going to mean change. Is some of that change going to be good? Maybe. Is some of that change going to be bad for business? Absolutely. Rising taxes are not good for big business. A lot of things are going to happen that will impact the stock market. You may or may not like or dislike either of the candidates, but I'm telling you, there's some profound impacts that will happen in the markets. You're just not seeing them now. You're not, okay? What is happening right here? So I want you to look at this. This is the patterns, right? This is 2008. So let me get a different color right here. So over here, 2008. We remember what happened. Remember, it tanked, 53% drop. 53%. People lost everything. People committed suicide because they lost everything. Like, that's the reality of what happened. It was just money, folks, but money then means you don't have a house, then means you don't have food. Like, it gets bad. That was the reality in 08, but we're not in 08. Who cares about any of this? That's not there, Chris. But you know what? We are here. This is where we're at. March. You saw the monster show its teeth. You saw what happened when COVID first hit, when the government shut the country down, when all this stuff happened. Fear is what that was, okay? The only thing that happened in March was fear. But then all of a sudden, we hit the bottom, okay? We hit a bottom, and then it bounced. and it came back up, which is what you're seeing here. This big run. X marks the spot. Here's where we're at today. I call this the bull trap. Bull crap, bull trap, whatever you want to call it. This isn't real. It's going up. It's rallying like the market's going up. We just broke 30,000. Okay? How? Why? If COVID's going on, if the country's shutting down again, or states are shutting down, I can't say the country because Texas is just fine, and so is Florida. But here in New York, you might as well lock yourself in a cage and throw the key out. Things are weird. Okay? Things aren't good. The economy isn't good. Unemployment numbers aren't good. None of it's good, but the market's rallying. Why? You got to ask yourself, why does the market go up when everything else seems like it's falling apart? I got an answer. FANG. If you haven't heard of FANG, and I don't mean the fangs in your snake or your cat's mouth. FANG is Facebook, Apple, Amazon, Netflix, Google. The initials spell FANG. How are those companies doing, folks? How's Apple doing right now? Pretty darn good. How about Facebook? Are they doing good? Everybody's watching Facebook, and I'm sure some are tonight. Okay? Amazon. How many of you received those little boxes or now have those dark blue trucks pull up in your driveway? How do I know? Every day I got a box on my step. Because everything we buy seems to be coming from Amazon because we don't want to go to the box stores. So we use Amazon. They're crushing it. How about Netflix? How many of you are watching Netflix now? When that subscription kind of comes up and all of a sudden you forget to pay it and they cut it off. Oh my gosh, that's doing good too. And Google's not doing bad. Do you know how much these companies make up of the overall market indexes? And the indexes are nothing more than NASDAQ, the Dow Jones, the S&P 500. I'm not going to get into that. How much of those indexes that you look at every day when you turn your phone on and look at the stock market, when you turn the news on and it shows the market railing, you're looking at the indexes, folks. These companies make up a huge percentage of those indexes. So when you look over here and you see this big rally, this big bull trap going on right here, this big thing, that's why. Right now, why did we break 30,000? It's called speculation. It's quite easy to understand. It's excitement. It's not fear. It's the opposite. It's optimism. Why is there optimism? Pharma just, you got Pfizer, who's got a vaccine that hopefully is going to be out in a couple of weeks. That's good news. And it really is, folks. I'm not saying this is bad. It's really good. Market reacts really positively to that. So we are at these record numbers. But when you're at the record numbers, do you just sit back and say, oh, this is never going to end? Whew. Glad I'm invested in the stock market. This is going to be freaking awesome. No, you should actually start being scared. You should start thinking, something doesn't feel right. Does that feel right in the pit of your stomach? No. Understand that those feelings are real. Something's coming, folks. I don't know what it is, but I see the signs of it because this is what I was trained to do. I know what's coming, just don't know when. So if we think that this might be real, if we really think that pretty soon, when, not important, but pretty soon, this is the reality of what's going to happen. And mark my words, folks, it is. I can sit here comfortably and you guys can crucify me if I'm wrong, but that's coming. When? I don't know. January, February, March, April, May, June? I don't know. You can't time the market. And if you can't time the market, what do? Do you just take all your money, pull it out? Not a bad idea. But I got a better solution because you don't need to do that. You just need to learn one or two new things. So this is the reality of where we're at. Nobody can deny that this is coming. Not Ray Dalio. Okay, Ray Dalio, one of the most well-known and most respected hedge fund managers in hedge fund companies, Bridgewater Capital, the largest hedge fund in the world, he's talking like I am. So either I'm crazy and he's crazy or everybody else is crazy because I'll tell you what I'm seeing right now. Let me go one more round. Okay. You know what I'm seeing? I'm seeing everybody do the exact opposite of what they should. You ever heard of Robinhood? Robinhood's reporting record numbers of new people opening accounts. Records. Okay, if the market's going down, why are people plowing money into the stock market? It's because it's like gambling, folks. When everybody else is doing it, whoa, my God, everybody's winning at that table. Let's go over here. Everybody's putting money on black. Let's put it on black. They're conforming, folks, and I need you to create. I don't need you to conform. I need you to create. This is what you should do. You should buy low. We all know that. Duh, Chris. Of course, buy low. What else should you do? You should sell high. Market's at the highest point it's ever been. Ding, ding, ding. Clues. Remember CPC. I'm just giving you the clues. Okay. And if you sell high, you don't lose money. But what do most people do? They ignore the clues. They ignore all the patterns that I just showed you, clues and patterns. And they make choices that are based on the wrong information, the wrong knowledge, and the wrong motive. It's called greed. And then what do they do when they base it on that? Well, they buy high. If you bought any stock right now, if you bought anything in the market right now, what are you doing? Whether you like it or not, what are you doing? Yep, you're buying high. Check, got it. And if you buy high, and what I'm saying, and it goes down, and you lose your house, you're losing your car, you got no money, what are you going to do? I'll tell you what you're going to do, because I've seen it happen over and over again. You're going to sell low because of fear. That's what you're going to do. Listen, you don't need to believe me. That's what you're going to do. I'll tell you that's what you're going to do, because I know. And when you sell low, you will lose money. So are you guys ready to change that? Because what I came up with tonight, okay, took a lot of time, not just from me, but from one of my traders. And we came up with something that I think, go ahead.
I'm excited to see this while you're pulling out.
I'm so excited to present it, because I don't know how we came up with this, but it's freaking awesome. And it's just so stinking simple.
All right, cool. We've been talking about this VXX strategy. I'm super excited to see this.
Good. Well, let me just get the right color up, and then I'm going to get into it. So VXX strategy. And listen, I want to repeat what Duck said. I'm not recommending you buy VXX. This is just what I'm buying. So I can talk about something I'm buying. I own 900 shares of this stupid thing now. I've been just buying it. And you know what I've been doing? I've been buying it because I know something, but I've been doing it different than you folks could, and different than you folks would. So let me show you what you folks want to do, and what you can do, and what I'm hoping you do. But first, you're probably like, oh, what is VXX? It's simple. It's very simple. It's an ETF, okay? It's an exchange traded fund, just like your mutual funds, except for it trades like a stock. But what does the VXX do? V, what does it stand for? Let's dissect this thing real quick, okay? Let's talk about this. What does the V stand for? Velocity. Okay? V is velocity. Everybody know what velocity is? When something moves, okay? When something moves fast. When the market goes down really fast like it did in March, that's velocity, okay? Velocity and volatility, okay? I said velocity. That's not really, it's actually volatility, but I want you to understand velocity. It's very important. Volatility is movement in the markets. Movement ups, fast moves up, fast moves down. Just want you to remember that. When the market goes down, does it go down slow? Anyone ever seen a market go down super slow, like kind of like a tortoise? Or does it go down really fast like a roller coaster? It goes down really fast. It's a domino effect. One domino goes, another one goes, brrr, they all go. 08, early 2000s in the dot-com crash, March. March is the easiest to remember because it just happened. Velocity, okay? And then what we're going to do is we're going to go against the norm. Okay, so why do I use the VXX? I use it because I think the market's going down. And when it goes down, it's going to go down with heavy velocity, and it's going to be very volatile. So this is nothing more than a fund that basically moves with velocity. Okay, that's the only thing you need to understand. The rest really isn't all that important. But what is important is how we use this, okay? So these are actual trades. I want you to know I'm going to show you actual live trades. Real trades, okay? The first trade is from earlier this month. So why not look at it earlier this month? Because it's the easiest thing to look at. Now, don't get all hung up in this chart, okay?
Hey, Chris, can I ask a question?
Please do.
To clarify it. So this is a fund that's like a mutual fund, but it's traded like a stock. Mm-hmm. So you can do instantaneous trades. But is it betting on the market going up or going down? Can you clarify that?
Sure. It's betting. So the VXX is betting on the market going down. But here's the cool thing. The VXX can also work if the market goes up really fast, which it rarely does. Okay, I want to be clear. The market usually goes up rather slow. But if it did go up fast, you'd capture some upside. But I just want you to focus on, if we think that the market is going down, We want to basically bet on things that we think, are going to capture the money when it goes down, which is going to be this velocity. Okay. Just think of velocity and think of volatility. Those are the two main things.
So this is a concept that if you are nervous about the stock market, you think that we're at a all-time high, or it's the air is going to be let out of the balloon, this is all going to come to a head, this would be a good strategy or something.
But I actually want to make it even simpler, because now all of a sudden, now we've got some people saying, well, I think it's going to keep going up. It doesn't seem like it's going to go down, Chris. It's at 30,000. It just seems to keep going up. This is a strategy that I'm going to show you that you're going to learn one new thing. Remember the bicycle. You're going to learn how to ride a bicycle again. Okay. You're going to learn one new thing, and you're going to do that same thing consistently and persistently. That's the most important thing I need you to understand. What I'm going to show you is something you're going to do consistently and persistently. And everybody's like, well, how often do I have to do this? I don't know anything about this. I've never learned this. I'm not smart. Yes, you are. There's not one person on here. I don't know how many we got. Okay. Not one person that's not smart enough for this. Not one of you. Okay. You all can do this because it takes 10 minutes of your time every 90 days. And hey, if you want to do it a little more than every 90 days, great. But I'm just going to show you 90 days. Okay. Because if you can't afford 10 minutes every 90 days, boy, oh boy, I'm speaking to the wrong group, because I know you can, because I got no time and I can do this. That's all we're going to do. But see, what we're first going to show you is I'm not going to show you actually buying the VXX. I'm going to show you using what are called options. Okay. I'm going to show you using an option strategy on the VXX. Because it trades like a stock, you can actually buy derivatives called options on this stock. Don't get hung up on this. I don't want you to think this is complicated. I promise you in the beginning, it's just like learning anything new. It's foreign in the beginning for about a day or two, and then you're like, oh, I get it. It's easy. And it is easy. So let me make it easy. You look at this, you're like, oh man, that doesn't look easy, Chris. That doesn't look easy at all. It is. Watch. Let me show you what this is. Here's my trade right down here, okay? I'm going to buy. Pretty easy, right? I'm going to buy the VXX. Let me move this out of the way here. Okay. I'm going to buy the VXX, but I'm going to buy a call for February. Now, remember, I told you we're doing this trade in November. Okay. This trade was done early November. And what I'm doing is I'm making a trade today, okay, on what I think is going to happen in the future, but I'm buying myself 90 days in the future, 3 months for this to happen. So I've got 3 months for what I think is going to happen to materials. I don't have to know when it's going to happen. I got 3 months to figure this out. I got 3 months to let this thing happen. So it doesn't matter what happens tomorrow. It doesn't matter what the news says a week from today. I got 3 months. Okay. So I'm going to buy a February. This is the expiration. It's February. I'm going to buy a February 19th call. You don't need to know what that means, but that basically means that I'm betting in 3 months from now. Okay, November, December, January. I'm betting by February 19th, the stock market is going to go down in one way or the other. Or it could even rally up, but I'm betting it's going to go down. And if it goes down, I'm going to go up. Remember, we're doing the opposite. If the market goes down, you're like, oh God, I don't want to go down with the market. Oh my God, I don't want, right. But if it's going to go down, let's make a ton of money on it going down, because when that goes down, we go up. Got it? So if the stock market goes down, we go up. So what I'm doing is I'm buying this, and all I'm going to pay is $1.45 a share. Okay? $1.45. That's my cost. But I'm not going to just control one share of VXX. That would be boring. I'm going to control 100 shares. Remember I talked about velocity? The other thing too is I'm going to leverage this. I'm going to take my dollars and I'm going to leverage that dollar, because I don't want to just buy one share. I want to control 100. So if I take $1.45 times 100, what's the cost? I'm putting $145 into this trade. That's all this is. I'm literally not, I could have showed you $1,000 trade, a $14,000 trade. No, I'm showing you just doing a budget of $145, because what we suggest people do with this and what we teach is using 10% of your portfolio. So you can do that, $145. So that's what I did. I made one trade. This took me less than 10 minutes, and I did it in November, and I'm anticipating this based on February. That's all I'm showing here. So there we go. That's all we got here. Let me get rid of this screen. Again, all this charting and stuff.
Can I jump in real quick, Chris?
Please.
So VXX is on just like anywhere you buy a stock, right?
Absolutely.
You can buy it.
Any TD Ameritrade, Charles Schwab, I don't know, Robinhood, whatever you're on, but not probably in your 401k.
But today, the price on it was roughly $17.50 today.
I had it at $18.12. So this is the price of
$18 today.
Yep.
And you're betting it's going to go down to $1?
No. Remember, I'm not buying. I'm going to show you buying the VXX like we've talked about. I'm not buying the VXX. I'm buying an option on the VXX. I'm buying a call right here. Buying a call. So this is the price of the stock, $18.12 when we did this, okay? And what I'm doing is I'm buying a call saying with a strike of 30. I'm saying that I want this to go to $30, okay? Well, wherever 30 is. I'm wanting this right here. I want this to hit $30.
The VXX to hit 30.
I want the VXX to go from 18 to 30. And how would it go from 18 to 30? The stock market goes down. Very simple. Okay? Very simple. This is what I want. This is my anticipated move, as you can see from the purple line. But that's what I want to happen. But I don't want to just buy VXX at 18.12. And I will show you that in a second. But I'm just showing you two different things. So what I'm doing is I'm buying a call. Okay? And again, there's a little knowledge you got to get this. And I'm only spending, what did I say? $1.45. So 145 times 100 equals $145. That's my trade. Okay. Don't get hung up in the details, folks. I promise. Let me just show you the result and then we can worry about the detail. So that's what I did. And based on what I did, this is what happened. The stock, okay, VXX, VXX went from that price that we anticipated, right, at 18. And it went up to $22.98. Okay, $22.98. Now, when did it do this? Because now I'm looking at this. Remember, I had till February, but I'm never going to wait till February. I wait until it hits that right here. Okay, so I'm at $22.98. And what I would do at this point is I would close the position and I would make money. Because remember, what do? You buy low and you sell high. So this impact of what just happened here, okay, remember the same thing. All I did is bought a call expiring in February in anticipation of the stock going from 18 to 30. Now the stock is at $22.98. So I don't want to wait. I don't want to wait till it's 30. I just want to make a decision right now because now here I am in this position. Well, let's just see what just happened. Because folks, this isn't hard. When you look at your statement, if it says there's a profit, is that a good thing? If there's a profit and you know that position that you bought expires in February, would you take your profit? Absolutely, because in February, it goes to zero. You'd never wait till February. If you made a profit, you would take it. So what is the result? Here you go. This is exactly what happened here, folks. So I want you to understand what we just did. We bought VXX. That's the ETF. That's the stock. All of you can buy this on any brokerage platform you have, but I didn't buy the stock. I didn't buy the ETF. I bought the call. Okay. And I bought the call that expired. This is just the date, right? Just imagine this is February 19th. That's my expiration date. That just means at that point, it's all over. And I was anticipating it going to 30, but it didn't go to 30. It went from 18 to about $23. That's it. We went from 18 to 23. How often do you have to watch this thing? Once a day? Literally. Like, I don't know. Pick your phone up and look at it one time a day, maybe twice a day. You won't. You'll look at it all day long, but that's all you need. And when it did that, when it went from 18 to 23, you made a profit of $176. I want you to think about that. You paid $145. Okay? $145. And how much did you make? $176. You made $176 on a $145 trade. That is more than 100% return. Could I have shown this with like a much bigger trade and wowed you and showed big numbers? Yeah, but like, how is that not exciting that you could spend $145? It took you 10 minutes of your time and you had to watch it maybe once a day just to appease yourself. And as soon as it hit your number or somewhere close, you could have decided to wait for more than 30, but greed is not good. $23. I'm out. I made $176. Now, here we go. This is if I just went out. I didn't do what that. All I do here, okay, all I'm going to do here is I'm going to buy the VXX. Whoops, let me change my color so you guys can see it.
So this is what I've been doing the last couple of days is buying VXX every time it goes down.
Same thing that you and I are both doing. I'm doing the same thing to you. Yep.
Yeah.
Same thing.
Averaging.
That's all we're doing. All we're doing is we're buying the actual ETF. Okay, we're just buying it. Okay, so let's just assume right here, same date range, right? February, we're shooting for, and all we're going to do is we're going to buy it, and we just bought it at 18, and remember, here's 23. So I'm trying to show you, like, this is the same exact thing I just did a second ago, but there was one difference. For $145, which was the amount of the last trade, I was able to control 100 shares of VXX. If I take that same $145, the same dollars, I am able to buy, and I got to kind of get this little bugger up here because it's got to get out of the way. I'm able to buy right down here, you can see it, 16 shares. So I can buy 16 shares of the VXX at $18.11. There you go. 16 shares. I'm buying long. Long just means I'm buying for the long haul of the VXX. Okay, they're called a stock. It's an ETF at $18.09, but it's $18.11. So don't get hung up on the $18.9, $18.11. Things in the stock market move so quick, it just reflects that. So all I want you to understand here is this is what me and Doc are doing. I'm not suggesting that you do the same thing. This is just one that I picked to show. I bought 16 shares of the VXX. I spent $145 in what, and I don't own 100 shares. That was the prior one. So what is the result? Exact same time frame, exact same dollars, but I didn't leverage my dollars. I didn't use options to leverage my dollars. So what is the end result here? Well, let's look at it. Next slide. It's still pretty good. It really is. So what happened here? Here, I spent $145 on the trade. I own 16 shares of VXX. This VXX still moved the same price range, $18 to $23. How much profit did I make? I made $79, which is $100 less than what you would have made in the other trade, spending the same dollar amount for the same time frame, for the same energy put in, except for the other trade, you just learned one additional new thing that took a little more knowledge. That's it. That's all it took. There's nothing complicated about this at all. Trust me. But you made an extra $100. Why? Why did you make an extra $100? It's easy. Here, I have 16 shares. That's all my money could buy. There, I controlled 100 shares of VXX.
I guess I'm confused about how a call gets control of 100 shares.
So,
go back to the $1.45.
Yeah. So a call, and again, I'm not going to go deep into this, folks, because it's just there's a little more to unpack than what I'm saying. But a call is a contract. An option is a contract. This one here that we did, this is nothing more than a contract I'm buying. And I'm basically buying a contract that gives me the right to control 100 shares. That's all it is. It's just a piece of paper. You don't have to deal with any of this. I'm just trying to explain it. It's a piece of paper that allows you to control 100 shares of VXX. And all you're doing is you're basically betting on this moving the direction you want, which we already talked about, right? We were betting it went from $18 to $30. And for it to go from $18 to $30, what did we establish had to happen in the stock market? This had to happen, okay? And this is real, folks. This is a real trade. So in that time frame, from November to when we actually sold it, which would have been February, if we were to anticipate that for this one, if that happened, if it went from 18 to 23, this is how much I would have made. So that's how it works. So Doc, like, does that answer it, or do you want me to go one layer deeper?
No, I think that's good enough. We should probably keep going with your presentations also.
Yes. All right. So now all I'm going to do, so this is what me and Doc are doing, just buying VXX. So now what I'm going to do is I'm going to show you a live trade from back in February. And I want you to understand something. I'm not timing the market here. Every single 90 days, we're doing the same darn thing. We're just doing the same trade every 90 days. We're not making anything different. We just think that the market's going to go down. So we just keep trading the same pattern that we are believing in, which we think it's going to go down. So here, again, don't get all hung up on all these things here, because this is the only way I can show it when I'm actually doing live trades. Here I did. Whoop, wrong color. I'm buying the VXX, but I'm buying a call that allows me to control 100 shares. So I'm back to buying an option. And I'm betting that this option is going to expire, or I'm betting on this move, this price move, basically happening before June 20th. Now, when did I say I did this? I did this in February, okay, February 10th. And I'm buying myself time to June, I'm sorry. So February to June, plenty of time. I'm giving myself time for this move to happen. And what do I want to have happen? Well, here's where I'm at. And I just want you to see this. I put this on here. I just want you to see if this is the market. This is this particular position. So every time it goes down, this means the market's going up. When it goes up, this means the market's going down. Because remember, this works inverse to how you think of the market. You think of the market, when it goes up, you make money. And when the market goes down, you lose money. This particular position, this stock, VXX, does the opposite. When the market goes down, you're up. When the market goes up, you're typically down unless it's heavy velocity. So that's important to understand. And I just want to show you, like, I didn't go in here and manipulate this and say, oh, well, we bought this at the best time to buy it, which would have been right here. No. We didn't do that. We actually just bought every 90 days. This is what we do. It's boring. It's literally ridiculously and unbelievably boring, which is why I'm showing it, because boring makes money if you do it consistently and persistently. So all we did, we bought one contract. Okay, this is one contract which controls 100 shares of VXX. There it is. Okay, and we bought it. And how much did we spend? You guys should already know this. If it's $1.22 per share, $1.22. So $1.22 out of your wallet per share. And how many shares? 100. So I spent $122. That's how much this trade is. 122 bucks. That's all we're doing here. Okay. Now, what I'm going to show you next is I'm going to show you basically the same thing. Okay. Now all we're doing is we're just fast forwarding. So that last one was February, right? This is 30 days later. This is March. Do you guys remember what happened in March? The market moved the way I wanted it to. It went down. Why did it go down? COVID. Okay. Government shut down. Okay. The country, like fear and panic. Kind of mimics what's going on right now, doesn't it? Because right before, in February, what was the stock market doing? It was doing really well. What was the stock market doing in January? It was doing really well. It had been doing well, really well for a while before. So everything was going up, up, up. March, COVID hits. We learn what it is. The government shuts the country down. Fear sets in. Businesses shut down because they can't open. What happened? Stock market went down. I didn't know that was going to happen back when we did this, because we made the trade in February. In February, when things were good. But we were basically just doing the same thing we always do. We've been buying this thing for a while. You don't get to 800 shares by doing this. Now, 800 shares is what I own of VXX, but I also do this. I just do this every 90 days. This is like a hobby. So every 90 days, I spend 10 minutes, and I do one of these stupid little trades. That's it. This trade I'm showing you. I buy one contract of the VXX. You know, it doesn't matter. Don't worry about the time. A call. And in doing that, in this particular one, I want you to really focus on one thing. This is March. I bought it in February. This is now March. What is my profit? Potential profit. $3,815. I want you to think about that. How much did I spend? $122. 122 is what I spent. The market moved in the right direction. Look at this. This is VXX. That's a pretty good chart. That's what you want to see. I don't want to say I got lucky, but I mean, it moved the direction in March 16th. So if you were up $3,815 on a $122 trade, what would you do? Doc, what would you do? Would you keep it and be like, it's going higher?
Sell, baby, sell.
Sell. So we sold it. Gone, done, sold. Just like your auctions, we sold. And what was the result? I'm not making these numbers up, folks. This is real. I just showed you that this is real. Here you got it. That's the result. 3,127. I'm not saying you're going to get this all the time, but you know what? If Duck and I are even half right about what we think is coming, you're going to get this freaking really right. And this trade is $122, folks. I didn't show a trade with 12,000. I didn't show a trade with 1,000. I could have. I showed a trade with $122. One contract on the VXX, 122 bucks. The return on my trade was $3,815. My net profit after subtracting the 122 is $3,693.
All right, Chris, I'm going to play devil's advocate.
Please.
So for the skeptical people, if they didn't sell back in March when the market had crashed, and because people are saying, but I wrote it out. I wrote it out and it recovered and I've made my money back plus some. How do you respond to those people who say, just write it out, dude?
You'd be doing both. So you're talking about writing it out. Writing out would have been just like, let's just say you bought the VXX and you just own that stock. Okay. You just own that. You're writing it out. Okay. That's fine. This is just this is one additional step in your process, right? You can still wait and write it out. And and I already explained what happened, why you wrote it out and why you feel good and fuzzy inside right now, because your money's all back. It's a bull trap. It's not going to stay this way, folks. The past doesn't determine the future. Clues, patterns. Remember, we talked about those clues, a lot of clues. The pattern is very simple. 8-year cyclical cycle. It's a 7 to 10 year market cycle. We're in the 12th year. I don't know what else to tell you. It's an election year. I don't know how much more to pack on there. It's COVID year. Hey, I don't know what else to say. Clues, patterns, and what's the last part of it? The last C? Choice. Choice. You have to make a choice. The clues and the patterns determine where you're going to go, and you have to make a choice. You can write it out. You can wait it out. By all means, if any of you want to, like after seeing what I'm showing you, if any of you really believe that you want to ride this thing out, you just are okay with just riding this thing out, no problem. Go ahead. Your risk is different than mine. I'm just not willing to do it. And if you watch the movie The Big Short, those guys waited it out, picking the right direction. And they went through a lot of pain and suffering. They lost a lot of money. Just like Duck was saying, like he's down in his VXX position. So am I. But that's okay. Because when it happens, we're not going to be down anymore. We're going to be laughing, literally like cracking bottles of champagne or whatever we want to do that day. We're going to be laughing is what's going to be happening. But we got to wait for it. Okay. I'm not saying don't ride it out. Ride it out. But this strategy, this return, this is just adding one thing to your writing it out. How about this? Let me give you another.
I think what we should do right now, Chris, is ask this question for all the people watching. If you are watching right now, put a 1 in the comment section if you think the market's going to crash.
That's good. I want to do this.
Put a 2 in the comment section if you think the market's going to go up. Because I think that's the big picture that we need to kind of get people to understand. Put a 1 in the comment section if you think the market's going to crash anytime soon, like relatively soon, or a 2 if you think this is going to keep going up. And let's see. We got Estella with a 1, Lynn Marie with 1, Avery with a 1. I think intuitively everybody knows. Look at that. Andrea, all these 1s are coming in. Look at that. So just to summarize, what you're trying to tell them is this VXX is basically shorting the stock market, right? Like you're betting that it's going to go down.
That is correct. That is absolutely correct. I'm betting it's going to go down. And all I'm doing is I'm hedging my bets too, because if it doesn't go down and it keeps going up, I don't want to lose money. So I'm hedging my bets. That's what that little thing I showed you. That's what that $3,000 was. You see, the biggest problem all of you are faced with. I mean, look at this. Everybody's a 1. Like, come on. Like, if everybody's a 1, like what part of writing this out makes sense? None of that. The problem is right here. I spelled it out. There's a lack of knowledge in this entire country has a lack of knowledge. You just don't know what I showed you. You just never have seen that. No one's ever shown that to you. It doesn't mean it's hard. It doesn't mean you can't do it. It doesn't mean it's even remotely complicated. You have 10 minutes a day every 90 days because that's all that was. It was knowledge. You just have a lack of knowledge. They have the incorrect and insufficient knowledge. Sorry, there's 2 F's here. It's PDF on what they're doing. That's all it is. But you don't, all of you, look at this. None of you believe that this thing's going to keep going up. So we don't even need to have that discussion. The other thing, this goes right with that. You have the incorrect strategy for what's going on. That's all it is. You have the incorrect strategy because of your understanding, because what you've been taught your whole life. Every time I'm on here, I talk about this, right? What you've been taught your whole life to believe about money isn't how money works. It's not how the wealthy use money. The wealthy know the right strategy for the right time. That's what I'm trying to show you. That's what Duck's trying to show you too.
I don't think the average person understands like the Dow Jones, the S&P 500, it's a conglomerate of like stocks, and depending on which ones you own, your stock might go up or down. So the Dow Jones might go up, but if you own I don't know, a JCPenney, it might be down, even though the market went up. Right. Absolutely.
And that's the consistency.
Yeah.
So here's the other thing too. What I showed you. Go ahead.
VXX is betting that if the market goes down, you'll make money. So to give an example, and I think we can say this, we can't predict the future, but we can talk about the past, right? So back in March, when the stock market had a huge crash at the beginning of coronavirus, everyone remembers that. It went from like 25,000 down to like 19,000, right? Something like that.
Yeah.
I looked at this. VXX went from somewhere around $20 up to $60, $69.
Do you know how much money you would make? Can you even fathom how much money that would be?
In like 2 days.
I own 900 shares of this. Can you even fathom what that would be? What would that look like in a week? Yeah, I mean, in a week. What would that look like? But now let's take that one step further. What would that look like if I took my 900 shares and I multiplied that times 100?
Well, I'll do some Asian math in my head. So let's say you paid on average $20 a share of VXX and you own 900 shares, right? That's 18 grand. And if March repeats itself and the market tanks back down to 19,000, it went up to, let's call it $70 times 900 shares. That's $63,000. You went from an $18,000 position up to $63,000. That's an example from March. Like, we're not predicting the future. We're not telling you what to buy, but this is an example of how people don't understand what's really happening when they're buying individual stocks versus mutual funds, versus I have a Vanguard, I have a 401k. What about, hey, what's that college one, that 501 fund or whatever?
529s?
Yeah, 529. Like, people are really confused about that. This is very simply, if you think the market's going to go down, like what I'm doing is buying VXX.
Yeah, absolutely. And and I'm doing the same thing. I'm doing the exact same thing. I'm buying VXX. There's the proof of the pudding. But what I'm also doing is adding one additional step, and I'm leveraging my position in VXX. Because while I have, this is the thing I don't have time for tonight at all, but while I own 900 shares of VXX, and maybe you all, buy 100 shares, whatever, every 100 shares, I can actually make income off of those 100 shares with these strategies I'm talking about. I could literally get paid every single month for owning 900 shares. I could get paid for 100 shares. But all I'm getting at is you need the right strategies, because the strategies you need are just a little bit more knowledge than you have right now. And the biggest problem, and everybody was saying it, because I see the inconsistency in everybody's answer. Like one person saying, well, I wrote it out in March and I'm back. Okay. That's inconsistent. What you need to do to make money in the market, I'll be perfectly blunt about it. Do the same thing consistently and persistently. Set a set of rules and follow those rules. Don't deviate from them. Don't follow the herd. Don't listen to what everybody else says. Follow a pattern. Follow a very regimented plan. It's what I do. It's what I don't always make money on that, but I make money consistently over a lot of time. And we can show you how to make money when the market goes up. I can show you how to make money when the market goes down. I can show you how to make money when the market goes sideways. But I just did. The only difference right now is you don't know how to do what I did. And I don't have time to show you. It takes mentorship. It takes literally coaching. That's the only way to show you what I did. All of you can do what me and Duck are doing, and you could buy VXX if you think the market's going to go down. All of you have a choice right now to make. You could get out of the market right now and park your money in cash. Doesn't matter. It's safer than the outcome of what's going to come, and then you can decide what to do. But if the difference of what I just showed you, that 3,000% return and all those returns I just showed you, is you learning one additional thing. Like, what is the holdup? Because honestly, you learned how to ride a bike, you learned how to drive a car, you learned how to do all the things you do today in your life. Now is the time to learn one additional thing.
All right, Chris, I'm going to be skeptical, Chris.
Please.
Like, why is it then that we've always been taught by a broad mutual fund, by a broad S&P fund, don't time the market, be in it for the long haul? Like, why?
You want me to answer this?
Yes, please. Because I think a lot of people are, what you're saying is very like counter to what we think, like what the average person thinks is good practice, you know? And all we're saying is learn more knowledge, get better strategies, stay consistent. We're not telling you to do anything, but what you're saying seems to be so contrarian.
It's not. It's not contrarian at all. It's what they all are doing, but they're not doing it for you. The reason they're not is they can't get paid to do it for you. They don't have the knowledge to do it, or maybe they do and they just can't get paid to do it. Folks, buy and hold, stay in the market, ride it out. Why? All right, I'm gonna put my advisor hat on. Okay, hang on. I don't have a tie, but let's just pretend. Right now I'm your advisor from back in 2000, whatever. All those years I was an advisor. Mr. Client, listen. The best thing you can do, I should tuck my shirt in. The best thing you can do right now is really just ride this out. The market's going to always come back. It's always going to go up over a long period of time. And if your goals are long-term, then we should just ride this thing out. We really shouldn't play into the market. You can't time the market. So let's just keep your positions there. Let's just keep riding it out. And over time, it'll be good. Okay. That's what they tell you. Why? Why is that? Why is that what Mr. Advisor tells you? Is that what your bank tells you?
That's how they make
when
money.
you move your money out of the market, do you think Mr. Advisor here gets paid? Does Mr. Advisor get paid when you move your money out of the market? No. Does Mr. Advisor get paid when you decide to learn what I just showed you and you do it yourself? No.
No, that's risky.
That's risky. Oh my God, why would you learn how to do what I went to learn how to do to get paid? Like, why would you want to learn what I do? Why would you want to learn that?
This is a good exercise because I think
holy shit, because I want to learn because I want to control my money. I don't want you, Mr. Advisor, to control my money. I want to control my destiny, not you, because you don't care as much about my money as I do.
What would an advisor, let's do high, middle, and low. What would an advisor tell you when the market's high? What would the advisor tell you when it's on the decline? And what would the advisor tell you when it's like really bad, like 19, 18, 17,000 Dow Jones?
So, I'll just tell you what I told clients in 2008. Prior to 2008, we were just keep the money in. Oh, it's good. Yeah. And we always had statistics. The average rate of return on this fund is 25%. Like, it's got a great track history. Yes, there could be some bad years, but there's more good years than bad years. I'd pull out my pretty little charts that show this whole thing. Look at how many good years there are on the market versus how many bad years. You're going to be okay because we got time horizon. Then all of a sudden, what actually happens, folks, is reality. I've shown this too many stinking times, but if this is what they're telling you to do, because the market only does that, right? Is that really what the market only does? No, the market does this, okay? Does this, then, I got to change my color. God, give me my red. I want to be observant of time. And it goes down, and then it comes up, and then it goes down, and it comes up, and you get the drift, and it comes down. Does it get to the same place after 10, 20 years? Sure. But what happens here, folks? This is what matters. What happens here? What happens here? Look back in your past. When the market falls, when it falls and it goes down 20, 30, 40%, do you stay in the market? Some of you might be like, well, I did. Yeah. But what do the majority of the people do? They sell. Why? Because of fear, because of reality, because they're going to lose their house. They can't pay their car payment. They can't put food on the table. They can't support their family. Are you going to keep your money in the stock market, or are you going to put food on the table? Seriously, ask yourself that question. That's the question.
I read something that was the thing that got me out of the buy and hold mentality was this graphic where it says, and I'm going to approximate the dates, but if you were, let's say you were 45 years old, 50 years old, and you bought like in 1970, to like 1992 or something, like a 25-year period, your returns were like zero. It was like flat, like you had nothing over a 25-year period. And if you were getting close to retirement, you were fucked. You were screwed.
Why don't you have your shirt on? Because that's the perfect thing for anyone that's retired.
I have my medicine shirt on.
Anyone that's 5 years from retirement, you should just read Duck's shirt. What does your shirt say?
The fuckity fuck one.
Yeah, that's what you're going to be. And listen, I'm not trying to scare you, folks. I'm just trying to give you an alternative solution to what will be the reality that makes you say what his shirt says. Because if anyone's retiring right now and you are staying in the market because someone's telling you to stay in the market, I feel for you. I truly do. And I wish you the very best.
I think the key, though, what we're saying is like, you got to take advantage. You can't get too greedy. You can't sit there and go, well, let's keep going up. Tesla keeps going up. Apple keeps going up. Well, I get that. But at some point, you're so close to the top. The view at the top, and you said this a lot, the view near the top of the mountain is pretty fucking good.
Dude, it's awesome.
You don't have to be at the peak, you know?
It's beautiful. It's beautiful. And when you're down at the bottom, when the avalanche just went off, like
it looks horrible.
You're screwed. You have nowhere to go.
And I was caught.
Doesn't matter how fast you run, doesn't matter how fast your snowmobile is, you're done. But at the top, you're just like, oh wow, that's a bad avalanche over there. I'm not going that way. Look at that lake down there. There's great trout fishing down there. I'm going there. You can call the shots wherever you want to go. So, and then what you could do is you could just pick and choose. Like maybe you don't want to go one place for good.
I guess what we're trying to say on a bigger message is guys, like everybody knows it's a big bubble right now. Don't try to like time it at the very top. Don't think it's going to keep. Just take your profits. You lost the money in March and it's now back. Take it off the table, right? Like just acknowledge that it is due.
Yeah. Just get it out of the market. Take your 401k, move it to cash, move it to the U.S. Treasury. Call your provider and ask them, what is the safest place I can move my money? What is the closest thing to cash that I can move my money into? Get out for now. Just watch it. Get at the top of the mountain. You are at the top now. I couldn't say this back in March. Couldn't say this in April or May or June. I can say it now. You are at the top of the freaking mountain. There is no higher. We're in Mount Everest.
And let me say, to be clear, though, in March, when it dropped down to 19,000, nobody could have fucking guessed it would be back up at 30. Like anyone who said, "Oh, it'll go back up," they're full of it. Was freaking nervous back in March. Am I right, Chris? Like
I would have said you're absolutely batshit crazy.
Going down, it might go back up to 20, but there's no way it's going to go up to 30. So anybody who is like patting themselves on their back right now because it's at an all-time high is fucking full of it. That's what I think.
No, you're absolutely correct. Anyone that's like excited because you're back and you're like, you think you did something right. You didn't. It's called the bull trap because it is a trap. It's like, you ever have a rodent in your backyard, you want to trap, what do? You take it out there, you put a cage in wherever the animal is, you put some food in it. And then what happens? You trap the sucker because it went after the food. All you're doing is going after the food, folks, and you're going to get trapped. That's what you're going to get. What I showed you there, that's how you don't get trapped. That's how you just do the same thing every single 90 days and you make a bunch of money without getting trapped because you can't get trapped in what I showed you.
There was a question that I was also confused on. So let me ask you. So when you do the options, the calls, can you only do that on shares you already own?
Oh, absolutely not. No, what I showed you, you didn't own any shares of VXX.
Really?
No, it's a naked call. Yeah, and again, I didn't go deep into the options because there's more to it. I mean, like that's why we coach, we mentor, we literally take people through a 7 trainings, like not just trainings, but 7 coaching sessions, one-on-one, like or in a group setting, whatever you want, and we show you how this works. But we don't just show you, oh, this is all how it works. We show you literally 2 things that fit your life. What do you need? What are your goals? And we show you what works for just you. So that you don't have to learn a bunch of stuff. You have to learn 1, maybe 2 things. Maybe you're like, all right, I need some income. And then I want to hedge my current stock portfolio that I have. I don't want to sell my stock portfolio. My grandpa left that for me. But I want to make sure that when the market goes down, I don't lose a bunch of money. Great, it's hedging. We can show you how to do that. You might own a bunch of shares of I don't know, what Boeing, right? You own a bunch of shares of Boeing. I don't know where that came from. And you just want to make an income. Great. We can show you how to do that. I can show you how to just with small trades like that, just make money over and over and over. But I can't do it in an hour. It takes it takes coaching. It takes mentorship. And that's what we do. It's not what I do.
If someone wanted more coaching with you, how would they get more coaching?
There it is. Okay. You basically, I mean, the link's in the bottom. It's $29.93. You're all like, oh my God, that's expensive. Really? Because I just showed you a trade that was $122 that made you $3,000. You'll pay for this. But a lot of people like, I don't have that. Great. We have payment programs. Like this is a full 7-week coaching. You pick the times, not us. If you want, it's a weekend thing. We do Saturdays and Sundays. You pick which week do you want to come. And it's lifetime. Like if you go through the 7 sessions and all of a sudden you're like, oh, I just don't feel like I did it. Great. Keep coming to them. Like we'll keep teaching until literally you have mastery. I'm not going to like get you on the bike and push you off and be like, oh, you're just not getting it, man. You're just not. No, you got to do it. My trader, Sodi, okay, he's a Wall Street trader. He does this. This is what he does for a living. That's who's going to teach you. And he's better than me. Like I'm pretty good at this. I did this for a lifetime or for 16 years, but he's way better. This is what we do. So if you wanted to do it, that's the price. It's $93. And this is not going to stay at this. It's $29.93. You can do it in 2 payments or 3 payments, however you want to do it, $1,500 or $1,050. There's no free ride in this. I'm sorry, because this is mentorship. And
now, you're not guaranteeing results, though.
No, but I'm going to tell you, like you just saw, I can't guarantee a result, but I'm just going to tell you, like if you do the same thing consistently and persistently, that's all you got to do. We'll teach you what to do. You do the same thing. You're going to get bored, but you're going to make money. So you're.
But on the other hand, like if I'm still lost and I'm done with the training, are you going to leave me out? You'd be like, no, you're not.
That's what I mean. Is
there another like, oh, you got to buy this thing and then you got to buy this and you still don't get it.
Not only that. Let me explain the training. There's nothing else to buy. Nothing else to buy. Okay, that's it. That's what you get. These are the virtual packages that come with it, so you can just keep watching it over. But this package, you do this, it's mentorship, lifetime. Like you want to come for a whole year of coaching every weekend? Great, show up. We're there. We're coaching. We're already doing it with other people. You got to get mastery in this. You might learn really fast. You might learn really slow. It doesn't matter. And the other thing too, the way we teach you is live trading, but not with your money. You're not going, when we're teaching you this and doing the mentorship, you're going to be trading on your computer with your account, but not your money. It's simulations, just like an NASA astronaut. Do they put the NASA astronaut in a spaceship and say, hey, go try this? No, they put him in a simulator. We do the same thing. We have a simulator. It's dollar for dollar. You literally simulate. How much money do you want to put into this? Great. You want to start with $5,000. Put $5,000 in your simulation. And we just keep doing it over and over until you have mastery. And then the cool thing about a simulation is you can see the patterns. You'll start doing these trades. You're like, wow, I made money there. You'll do it again. Oh my God, I made money again. Well, I did this.
Yeah, but like this isn't like a static program, is it? Like a video game where if you don't log in and put in the money, it doesn't work. I mean, you have live sessions where you actually telling you like
live sessions like.
Hey, fucker, like put it like, hey, we're starting.
Listen, like you probably will get, you can swear at us. You can yell at us. You can be like, I don't understand, Sodi, I don't understand. Show it again. Great. He'll show it again. Sodi, this is what I'm trying to do. Like, teach me that. Great. Teach you that. Like, but we're going to give you what you need. We're going to take you to the basics, the bare bone basics. We're not going to start it at 9. We're going to start at like -1. We're going to bring you from the basics up through with you doing it. Not just watching it. Like how many of you can learn by just watching a digital training? Literally, like you watch a video and you're like, oh, it's like a video game. I just do this. I can't. I need somebody to say, do this, do this, do this, and this is the result. Okay, and I do it and I'm like, oh, wow, it worked. And then I do it again and it worked. And then I'm like, I do it again and I do something different. And it didn't work. And I'm like, hey, Sodi, what went wrong there? What did I do? Okay, did this wrong. You did this. Oh, you got away from your pattern. Remember, you got to do the same thing. Every 90 days, you're doing the same thing. This is not hard.
What if they're like busy moms or single moms or dads and
10 minutes every 90 days? Really?
They're on the record. No, I mean like the training.
Oh, it's just weekend. It's weekend.
They can join the lives later if they're busy that weekend.
Well, yeah. I mean, they don't even need to drive. They don't need to watch a recording of it. They just jump on the next week, whatever week they're free. we work around your calendar. Like this is the first time we've ever had something like this because we did something no one else could do. Everybody else is like, okay, we're training January 22nd, 23rd, 24th. If you can't make it, we'll send you the recordings. Good luck. No, this is like, here's the whole year of calendars. What weekends are you available? Great. You're available these weekends. You could do Saturday this week and Sunday next week.
Hey, Chris, can you answer this question from this viewer who's been watching the whole time and she's been commenting? So Jesse's girl, how am I wrong for keeping it in, not selling, getting my money back plus $8,000 more? She's one of the ones who wrote it out through March, and now she's up $8,000.
No, that's great. But are you gonna? It's not about how much money you made. Okay, it's about how much money you keep. I'm not talking about how much you made. I mean, that's great. You made it back. You got $8,000, but can you keep the $8,000?
Her question is, how am I wrong for keeping it in? You're telling me to sell it.
I never said she was wrong. You got lucky. I don't mean to be rude, but you got freaking lucky. That's all you did. And luck will run out. So I'm not saying you're wrong. Okay. You wrote it out.
Duh.
That's it. But you got lucky. Like if you don't know what to do next, that's the problem. It's not what you did now. Like write it out. Try it again. I mean, be my guest. I don't care. Write it out. You'll get back all $8,000. You know who's going to take it back? We are. Because there's always one person making and one person losing. Do you want to be on what side do you want to be on? I'm not trying to like pitch a thing here, but like this is just the reality of what it is. Like you got lucky. I don't know what else to say.
Lynn Marie wants to know, so take out a loan on 401k to take myself out of market and buy VXX.
Oh, I don't know about that. Let's
a little weird.
Now I like what you were. I love where you're at. Take a loan. Get out of the market, because when you take a loan, you're forcing yourself out of the market. But then like buy VXX, this isn't a silver bullet, folks. Like VXX may not be the solution for you. I'd have to know more, which is when we work with you, like we don't just say, okay, here's what you do, and this is what everybody should do. No, everybody's different. Like I don't know, whoever just said that about the loan. Do you have debt? Do you have any credit cards? Because that's where we'd start. Because you're paying your credit cards 19, 20%. Like, let's start by making 19, 20% by simply paying your debt off and taking the money you're giving to the credit cards back. Let's go there first. And then let's talk about this.
So my friend Heather Rochelle, and I've been getting text messages this whole time for people, says, but I'm in the same boat. I'm up a ton with Tesla. I'm up a ton with Apple. I'm up a ton with NIO. I don't even fucking know what's NIO, N-I-O?
I'm not sure which one.
I'm up a ton with this and this, and it's like, dude, it's never ending. So what's your response there?
Oh my God, I feel like a fucking broken record sometimes. I'm sorry. You're up.
Calm down, Chris.
That's awesome. Like Tesla's a great stock. Apple's an awesome stock. I love all those companies, but please look at yourself in the mirror. Don't listen to me. Just look at yourself in the mirror. And I want you to recite these 3 sentences. Buy low. Sell high, and don't lose money.
Sell high.
All right, so you made a bunch of money in Tesla. So did I. I made a ton of money in Tesla. I love that company. If I sell Tesla today, when I made a bunch of money, I've got the gains, right? They can't take them once I sell. And then I wait, and Tesla goes back down. Okay, because in March, Tesla went down below 415. I bought it at 415. It went lower. Okay, then it came up to like 1800, and it split 5 for 1. And now it's doing really well. Sodi, who's on here, could tell you I made a bunch of money recently. Like I made, I think, $3,000 in a matter of like a day and a half on Tesla. Like, but do I still own Tesla? No, sold it because I took my gains, because I don't want someone to take it back. And if I sell Tesla today or Apple today or NIO today, and I take my gains off the table, does that mean I can't buy Tesla again? Does that mean I can't buy Apple again when it goes down? You can rinse and recycle that all over. But why are you so caught up in hanging on? What do you have to gain by hanging on?
Well, now you're talking about the psychology of it.
But it is.
Psychology of money. Like, not just stocks, though, Chris. Not just stocks, but about life and like not having
to get riled up here.
No, but it's all tied into our psychology as investors, right? Like,
we're inherent gamblers.
It's competitive. I grew up poor. I didn't have my, I have so much more than what my parents have, or I never had, or this is scary. It's all psychology, right?
Everything that you just told me that person said is psychology. You're attached to hanging on to a gain that you have because you think if you sell, you lose that. No, if you sell, you keep that. That's psychology. We're all inherent gamblers. We've been trained to be that way. We've been conditioned our whole lives. You don't even know it. Like, we can't take the glasses off until we step outside. Like, that's why Warren Buffett is so brilliant, because he says the simplest things. And he says, buy low, sell high, don't lose money. He also says, when others are greedy, be fearful.
Scared, yeah.
When others are fearful, be greedy. I was buying everything in March. I would go on every day. I'm like, ooh, what am I going to get? Oh, wow, Southwest Airlines. Yep. Royal Caribbean. Yeah, let's try that one. Yep, let's try this one. And folks, I made a ton of money on all of them because I was greedy when everybody was scared. Everybody right now is freaking greedy. Except for you out there.
My friend Sally has a good reminder here. She says, you only make a ton when you cash out. It's all make-believe until you sell it, right?
It is.
If you never sell your position, your stock, your ownership, it's not, you don't have that money. It's not in your bank account.
Right. Can I give you a psychology?
When you log into your TD Ameritrade or your E-Trade, like, it's in there. They make it look like it's in there, but it's not until you hit sell, right, Chris?
So you're correct. So right now everybody's got these big gains and like, all right, I'm pat myself on the back. I'm doing good. But like, let's go back in time, right? I don't care if you go to March or you go into 2008. Here's what I was taught to do as an advisor. It's only a paper loss. It's only a paper loss. If you sell, it's a real loss. It's only a paper loss. How did you all feel?
I can't believe you fucking brought me back to that horrible memory.
I'm sorry, man.
I totally heard that.
How did you all
tell me that?
How did you feel? Doc, I'm just going to pick on you. How did you feel about your paper loss?
I was $4 million in debt. I lost it all and became bankrupt, man.
So the paper loss, like, felt pretty bad, right? Even though it wasn't real, it's just a paper loss. Folks, listen, like, I was an advisor 16 years. I know that side. I don't mean to beat up on advisors. If some of you are advisors on here, like, I'm sorry, but you know what? You know damn well I'm right. You know I'm right, and you just won't admit it because it hurts your pocketbook. I'm sorry. But you know what? People deserve the truth, and the truth fucking hurts. So sorry about swearing.
Swearing, you're funny. All right. So
I'm just so passionate about this because it's
you know,
like those comments go right into the psychology of what we're trying to teach people not to do.
We're almost to an hour and a half, but
I know it's insane. I'm sorry.
I would tell you that your price for pretty much, I don't want to put you in a spot, lifetime learning. If it takes you a lifetime to learn what you're trying to teach them, lifetime learning for $2,900.
This is stupid cheating.
You and I, when we met, Chris, we were at a mastermind where we both paid north of $6,000 to be there. And it was like a, what was it? 2 days?
2 days.
Event?
2 days.
Maybe 2.5 day event. Mm-hmm. And then we were kind of done. And what you were left with was you could either remember what the speakers taught you, you could have bought into other programs or additional coaching, or really it was friendships that you could make, where I'm happy I made your friendship and continue with it. But then you're kind of done for that $6,000. You're talking $2,900, which is a lot of money for some people, but it is like lifelong handholding until you get it through your big, thick skull.
And it's funny. I looked down at one of the comments. I just happened to look down here, and Teresa. Okay, so Teresa's, one of your students, and she says, "I'm grateful for learning. Thank you, Chris and Sodi." Teresa went through the program, and I think there's probably more. I haven't really been looking, but like what I'm telling you is absolutely how it works. 100% how it works, because there is no other way to do it. And we're not sitting here trying to sling some fly by night thing like this right here. Like that is that's a lot of money. I'm not disagreeing, but that right there will change your financial future if you apply what you learn. And you know what? You don't have to come to an event and learn it all and like, oh my God, I got to remember all this and take all these notes. No, we teach through mentorship, through mastery, which means like riding the bike. You didn't learn to ride a bike by watching a video and just going out there. Maybe you did, but we teach you by teaching you to do it over and over and over again until you freaking got it. And we don't use your money teaching you. It's a simulator. You can use your own money if you want. By all means, you have the ability. There's like literally a button. You click live or simulated. When you're live, it's like turning that, taking the safety off. Your gun's loaded. Like that's your money. So we suggest you use the simulated trading, because then you're trading with fake money and you learn the patterns and you learn how to do it.
We operated on cadavers. We learned anatomy on cadavers, and then we had an animal lab, and we still learn on animal labs before we were allowed to practice on real people. And we took it very seriously, you know? So it's how you learn. It's diluted. You know, it's not.
I'll tell you something. Sodi takes this incredibly serious. He takes each and every single student's.
It's weird. It's weird. People won't pay $3,000, $2,900 for training, but they'll send their kids to college, which teaches them nothing, for $50,000 a year, and I have $200,000 in debt, and majored in basket weaving, underwater basket weaving, and stuff like that. Like, it's bizarre.
We spend $3,000 on a lot of really stupid crap.
Purses, shoes, vacations. You can't go to Disney World for under $5,000 anymore.
Well, this will pay for your Disney World trip every single year with 10 minutes every 90 days. I almost tell you that will happen. I
think not that we're promising results, but I think that's the idea, is if you invest this money, you can teach it to make more money.
Listen, what you just said, that just brought up a thing. You should never want someone to promise you results, or guarantee you results. You should want someone to promise and guarantee you that you'll learn something that will be with you the rest of your life. That's what you should want. Because if somebody promises you a result, it's a one-off deal. If someone promises you a lifetime knowledge that will carry with you the rest of your life, like what is that worth?
This makes me so happy. Look at this. Deborah Elton. I just put a call in on Robinhood for 100 shares at $1.22 for February 19, 2021.
Look at that. That's crazy.
Is that fucking crazy?
But she's doing it. It's right there.
I know, but this technology, not only to do our live, wasn't available a couple of years ago. And to bring up comments, and then someone to go on their phone and open up the Robinhood app and start trading and just implementing what we're trying to tell them.
Now, Deborah, just make sure you don't get greedy. Take your gains when they hit. Set rules for what you want to make. Do you want to make 10%, Deborah? You want to make 20%? Set your goals, and when it hits that, you gotta take your gains. Don't make $8,000 and be like, oh, it's gonna keep going. It won't work. We teach a very stringent, strict set of rules. It's almost like the way we mentor this is literally almost like the way the military would teach you. It's set rules. You don't break the rules ever. And when you do, there's consequences to pay. Maybe it's 50 push-ups, 50 sit-ups, crunches, whatever. There's consequences, okay? So we teach a set of rules that you will follow, and you have to follow, because that's how you're going to increase your probability of success. And what we teach here, the one strategy we teach has a probability of success of well over 90%. Can't guarantee 100%.
Not 100%, but it's
well over 90%. Very.
Let's just put something like to rest. What COVID has done has separated like the real entrepreneurs and gurus versus the fake Instagram influencers. Look at me. I got 6-pack abs. I sold this online course. I flipped 5 houses. I can show you how to flip 5 houses. Like, those guys and gals are all out of business. All these celebrity speakers, these people who want to be influencers, they're gone.
That's right. I know many of them. I know a lot of them that are gone.
Speaking platform, the conferences, the presentations, the get my free book, free plus shipping, but buy this online course, all that's gone. Mm-hmm. The only ones that are standing have actually done it, and they are actually delivering real value at a time when people really, really need it, when it's very confusing. Am I right?
Yeah, absolutely correct. And like, that's everything everything in any of and there's a ton of people on here that have come to my stuff. Like, that's what I believe in. Like, that's all there is. That's all you've got. It's not about money. Money comes and goes. Like, you can always make more money. It's not about money. It's about changing people's lives and solving problems. Like, if you do that, you will be perpetually wealthy your entire life. You don't need to go out and make money quick. You just need to change people's lives. And if you do that, you will be wealthy for your entire life. You'll have more money in things than you ever need, because it's not about that. It's about what you do for others. Zig Ziglar had it right, man. If you help enough people get what they want, you will get what you want. And I'm living proof of that. I don't come from anything. Same with you. You're living proof of that. Look what you do. Look at all the people you help every single day. You're relentless. Every day you do the same thing. Like, you should pat yourself on the back. Like, that's incredible. You're helping people, but because you're helping solve people's problems, your problems are being solved.
Well, I appreciate it. I appreciate it.
That's what it is about.
We've taken up enough of your time. I hope people.
Not my time. I know we always go an hour and over. I was like on point with 1 hour, but
so I shortened the URL link to drvmoney.com. So if you're interested in that training that Chris put up there, drvmoney.com.
Yeah, and listen, like, maybe you're like, I still have questions, I'm not so sure. Great, go on there, click it, and then we'll call you. Sodi will call you and talk to you. And when you're done, like, you don't think it's good for you, listen. Like, I refund people's money all the time because I don't want somebody that doesn't want this.
Oh, I love that. So it's really a no cost obligation. If they
100%. Listen, you can, if you go through this program and all of a sudden, like, you're through it and you did all the training and you don't like it, me and Sodi, we will give you your money back, because, like, it's not going to happen. But if that did, I just had somebody go through my 3-day event. Okay. Wow. And I think it was from yours. She went through the 3-day event and she sent me an email and she said, I love the training. I really like your enthusiasm. And she said, but I just didn't understand it. It just didn't apply to me. Is there any way I can get a refund? I said, absolutely. But I didn't just say, yeah, here's your money. I said, I really appreciate you putting the effort in. I'm sorry that it didn't work. It's not for everybody, but I will gladly refund your money and you can still keep the things that we sent you. Like,
wow.
Well, that's just the only way to do it. Service first. Yeah, she sent me the nicest freaking message. Like, literally, like, I should frame it. She sent me the nicest message back, and it was beautiful. It was just like, that's not what I was expecting. Like, and I don't know. It's just awesome.
Yeah. Well, obviously, if you don't treat my people well, then it's a bad reflection.
I wouldn't be here right now if I didn't.
A bad reflection on me.
Somebody
negative feedbacks.
Oh, there's Sodi right there. Yeah, because I gave him the link, so there he is.
Yep. That's awesome. That's awesome. So really, it's really no obligation just to go to drvmoney.com and have a conversation.
That's it.
I guess at the end of the day, that's all we're asking, because we want to, you want to help people.
Absolutely.
Right for them.
No. I think that might be somebody calling right now.
Time for your nap. All right. Look at that. Rosemarie, I got to take a chance.
You got nothing to lose.
At the end of the day, that's what it is. All right. All right, Chris, I appreciate you and your time. And we'll see you next month, brother. Have a happy Thanksgiving.
Happy Thanksgiving, everybody.
And your newborn baby.
Yes, little Viviana.
Vivian. Bye.
Bye.
Hey, guys, Chris is the best. I mean, he's like a brother to me. I trust him as the day is long, and the guy works nonstop. He's really sincere and legitimate and totally nice. I'm vouching for him. Maybe that'll get me in trouble in the future, and if it does, I'll fucking kick his ass. But these are weird, tough times, and if you dig down deep at the bottom of your soul, like, this market is fake. There's nothing holding up this market, and it only makes sense. And I'm only telling you that because I was caught in that trap in 2007, and I had my real estate agent tell me, no, the market's good. They're closing a bunch of houses. You're okay. And I got caught with a bunch of real estate that I knew I should have sold, beach houses and rentals, that did not make it through that crash. And then Hurricane Ike wiped it out with the economic crisis and no forbearance and no means of making any sort of income. It really devastated me. And I've been waiting for this day. I've been waiting for my comeback. I've been waiting, and so I've been hoarding like a fucking, chipmunk, all my nuts, and I'm holding on to that money. And I can't wait to partner with people like Chris and other friends and really like take advantage of this life-changing opportunity that's coming. We can't tell you when it's going to come. We can't time it, but dig down deep. You know it's a bubble. You know it's about to crash down. You know people are bragging. It's just like '08 all over again. Braggadocious, how much money they made on Tesla. Yada, yada. Like it's coming. You just have to be patient, and you got to make sure you protect yourself. So we just want to help, help protect you through this time. So with that, I hope you will check out drmoney.com. That's how you get Chris's offer. And like he said, he'll totally refund you. It's a non-obligation phone call. Take him up on that offer. It's just for you guys. Love you. See you tomorrow night. Happy Thanksgiving.